Life insurance is a scam. According to the dictionary, a scam is a dishonest scheme to gain money or possessions from someone fraudulently. Fraudulently. I guess it's easy to scam people when they don't understand what the thing is that's being offered and it's being presented or sold as something that is highly valuable. And life insurance is certainly a product that most people really don't know much about. I would venture to say that most people simply understand that life insurance is something that you pay a premium for, and in return, when you die, the insurance pays your beneficiary a sum of money that was contracted for. And that's true in most cases, but not all. Aloha. I'm Stan Cox, principal broker and strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy. And I'm the managing director of the Hawaii Financial Free Thinkers Academy, a nonprofit financial literacy education organization. For the past several years, I have focused on and specialized in the infinite banking concept and developing the tax-free cash growth warehouse finance strategy. Now, if you find this to be helpful, please like this video and subscribe to this channel and share it with your family and friends. Also, please post your questions and comments below the video here. So then, when is it not the case that life insurance pays the beneficiaries the death benefit contracted for upon the death of the insured? In every case, if the premiums are not paid as agreed per the insurance contract, the insurance policy will lapse or end, and there will be no more insurance and therefore no death benefit to be paid. That's part of the contract, so no surprise there, and no scam. Something a lot of people don't know is that there are three types of life insurance. Term life is the one that, while you still need to pay premiums for the length of the contract, it most likely will not pay any death benefit when you die. What? Okay, yeah, that's right. You see, term life is only for a limited time period or term, usually 10, 20, or 30 years. And as long as you pay the premiums as agreed, if you die during the term that the policy is in force, the insurance will pay the death benefit to your beneficiaries. However, if the term of the policy ends before you die, even if you were to die just one day after the termination of the policy, it will not pay any benefit. And that's entirely within the insurance contract. So should not be any surprise. So again, not a scam. It's in the contract. Unfortunately, some people expect that since they bought and paid for life insurance, it should pay out the death benefit no matter when the insured person dies. That's not how it works. The thing with term insurance is insurance providers have actuaries. An actuary is a person who is an expert in the science of risk probability based on the law of large numbers. The bottom line is that they take into consideration several factors pertaining to each individual that is applying for insurance. And then they calculate the risk of that person dying within a specified time period or term. And based on that level of risk, the amount of time the insurance provider is willing to insure their life is determined, and how much the premium will be for that risk and length of time. Insurance providers will not insure a person for longer term than what the odds of their dying are, as determined by the actuarial science applied to their case indicates. Now, The science is really quite good. As a result, somewhere around 90% of all term insurance policies terminate before the insured person dies. So, term insurance is a really good moneymaker for the insurance provider. It's not a scam because all of those conditions are spelled out in the contract. So, it's not a devious way to get money or something from you. It's all in the contract. You read it or it's explained to you before you sign it. So, not a scam. Whole life is the type of insurance that will pay the full death benefit to the beneficiaries no matter when the insured person dies. That is, as long as the premiums are paid as agreed. And in this case, premiums may be paid in full well before the insured person dies. It's possible. Depends on how the policy is designed. And there are a bunch of additional benefits that come with whole life insurance. Benefits for the insured while living. Whole life is the greatest value to premium and the greatest value and benefits all round as far as life insurance goes and as a financial tool. So definitely no scam in whole life insurance. Then there's universal life. Indexed universal life, or IUL, has become quite popular in the last decade or so. It's in the category of permanent and cash value life insurance, but unlike whole life, neither permanence nor cash value are guaranteed. And because universal insurance is based on a term policy with features built in that can grow cash value, the fees associated with universal insurances are not limited. They can and do increase over time, and those fees can cause the policy to lapse. So if the policy owner doesn't understand all the details of how the policy works, it can become problematic over time. Unfortunately, in my experience, a lot of agents selling universal policies don't have a full understanding of the fees and how the policy can lapse without additional funding. So while everything is disclosed in the contract, universal insurance isn't a scam. But who reads the whole contract for life insurance? It remains a variety that I urge a good deal of caution with. Now, there's a variety of whole life called final expense or burial insurance. Can't call it a scam, but it is more of a gamble. Here's what I mean. The death benefit of these policies are typically $20,000 to $50,000. And while the premium may seem small and affordable, they're scheduled to be paid for the lifetime of the insured. And if you do the math, what I found is that if the insured lives more than about 10 years from the time the policy is purchased, the premiums paid into the policy will equal the total death benefit. So if that happens, a person would be better off putting those payments into an interest-bearing account. Because if you keep paying the premiums after the break-even point with the death benefit doesn't even increase. And if you terminate the policy, the cash value will likely not equal what you've paid into it. So again, not a scam according to the definition, because everything is in writing in the contract. It's not dishonest, but not a real good deal either, unless the insured dies within just a few years of the policy's issue. So there you have it. Life insurance is not a scam, but universal and final expense policies are, in my opinion, not the best product, even for what they are designed for. And once more, whole life insurance is really a fantastic financial tool, especially participating whole life insurance issued by a mutual company and designed for maximum cash value growth and availability. If you found this to be helpful, please like this video and subscribe to this channel and share it with your family and friends. Also, please post your comments and questions below in the area for that. You have questions, we have answers. For a complete explanation of the tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar. The link is in the description box below. The link to buy my books on Amazon.com is also below. If you'd like to book a free phone consultation with me, the link to my Calendly page is also below. And if you'd like to apply to become a client of ours, the link to the application is also below. We're here to help. We look forward to helping you. Aloha and mahalo for watching.